classification of accounting. Are we together? Those aspects of accounting we have. Are we together? We are looking at those aspects of accounting. Now, the first thing is financial accounting. Financial accounting entails you preparing and presenting your what? Financial report by you presenting you preparing and presenting your financial report to the management for decision making. Accounting is all about decision making. What are those decisions they need to make when it comes to financial transactions? How management can what? Can make decisions of their what? Their previous actions, of their what? Of those things they've made that will help the business to what? To develop financially. Are we together? Are we together?
Yes.
Now, so let's move on. Now let's look at what financial accounting is all about. Financial accounting involves accounting process that starts with bookkeeping and ends with the preparation and interpretation of financial statements. It starts with what? Which aspect of this thing does accounting start with? So, which aspect does accounting start with based on what I've explained? Are you there?
Yes, I'm here.
Oh yeah, which aspects of accounting um does accounting start with? I've said it. Can you just mention it?
Okay. Financial
Financial accounting starts with what?
starts with the interpretation of preparation and interpretation of financial statement.
It starts with bookkeeping. What did I say? What did I call it? Bookkeeping.
Bookkeeping.
Bookkeeping. So financial accounting starts with what? Bookkeeping. And we've defined bookkeeping to be recording and classification of financial transactions. Are we together?
Yes.
So now it now starts with bookkeeping and ends with what? It ends with what? It ends with the preparation and presentation of financial statements and also the interpretation. You interpreting what you've prepared. Are we together? Are
Yes.
we together? So that's what accounting is all about. Now let's move on to okay. Now financial accounting is majorly concerned with providing information to both internal and external users. So as we move on here, we will look at the users of financial of accounting. Are we together? We will look at what user who are those people that need the financial information required from an accountant. You know, you've prepared your financial statement. Who are those people that need this information for them to make relevant decisions? Are we together? You know, let's assume I give you an information. So you receiving the information, you need that information for a purpose, yes or no? Are you there?
Yes. Yes, I do.
You need that information for what? For a purpose. Now let's take for instance, when you want to start your 8 years, at least you've written an exam before, yes or no?
Yes, I have.
You've written an exam before. You've been informed about what 8 years is all about. Yes or no?
Yes.
You have the information that okay, once I for me to be a chartered accountant, I need to what? I need to start from a particular what? A particular stage. Then this stage will now what? Prompt you in making your decision as to whether you are starting on what to do for you to be what? A chartered accountant. Are we together? Are we together? Hello, I need this class to be interactive. So for you to what? You've gotten the information, yes or no?
Yes.
Can you unmute your mic? You've gotten the information. Now the information you now have will now depend on the decision you make. And the decision you make is what you are into, yes or no? By starting with
Yes.
your registration, then attending what? Lectures. Then the next thing is writing of what? Exam. And by the time you are done, then the result of your decision will now will be that you are now what? You are being called what? A chartered accountant. Some people receive the information without making what? Proper decision. So the same way, we can relate this the same way to what? To accounting. You've prepared your information. You've prepared it. Then the next thing is what? You presenting it to the management for them to what? For them to now make their own decision. Are we together? Now, we have components of financial statements according to IAS 1. You might be asked to, in your exam, to list the components of financial statements. So let me start with, now the first thing you need to look at that should come to your mind is statement of financial position. Are we together? Statement of what? Financial position. The next thing is now statement of profit or loss and other comprehensive income. Are we together? So for your own level, we will be looking at just the statement of profit or loss. So other comprehensive income will now be treated when you get to ATS what? ATS 2 or the advanced what? Level. Are we together? Or the what? Advanced level. Then statement of cash flow will not be dealt with here. But when you watch, we will not deal with it here until you get to what? To the advanced stage of the what? Accounting career. Then also statement of changes in equity. Then the last one is now what? Notes to the financial statement. Note to the financial statement is just explanation on the information on other what components of financial statements. Explanation to other components of what financial statements. Now, what are the information you needed from your statement of financial position? We need three things from your statement of financial position. The first thing is your what? Item, assets. What did I say? The first information you need from your statement of financial position is what?
Your assets.
Assets. Followed by your, when it comes to assets, that's your resources. The resources being owned by the what? By the business. Economic resources owned by the what? By the business entity. Are we together?
Yes.
Are we together? Those are the assets relates to the economic resources being owned by the what? By the business entity. Then the liabilities are the what? Financial obligation of the what? Of the entity to other parties. The financial obligation of what? Of the entity to what? To other parties. Then the last one is now what? Equity. That's the owner's contribution to the what? To the business. So now, for us to get the value of our assets, our total asset is equal to the combination of liability, the addition of our liabilities with what? With equity. Are we together? Now,
Yes.
equity is all about owner's contribution to the business, which includes one, which includes the capital. You know what capital is? That is the money invested by the what? By the owner of the business into the business. Abi. Then another element of your equity is your net profit. Another reserves, net profit. Are we together? That is the profit attributable to the what? To the owner of the business after all expenses have been what? Have been paid off from the revenue generated. Are we together? Do you understand?
Yes.
So I said we need three information when it comes to statement of financial position. What are the three things we need? The three things we need from the statement of financial position. Oh yeah, what are those three things we need? What are the three information you need from three information you
Assets.
need from your statement? We need information relating to assets. Oh yeah, another one.
I didn't hear the remaining.
Liability. Liability and
Liability.
equity. Liabilities
Equity.
and equity. And I
Alright.
said equity happens to be the owner's what? Contribution to the what? To the business. Are we together? And I said asset happens to be what? Happens to be the economic resources being owned by the business. Are we together?
Okay.
So liabilities happens to be financial obligation of the business to other parties. So do you understand?
Okay. Yes.
So now let's quickly move on to cost accounting. Now cost accounting is the procedure for accumulating data to provide information for management action. So cost accounting is we gathering data for what? For management action. We need this information for management to make some decisions. And what are the decisions needed by the management? Management needs information relating to cost, the cost incurred by the what? By the management in their production what? Process. Are we together? Are we together? Now, cost accumulation cost accumulation is the collection of cost data in some organized way by means of what? Accounting method. Cost accumulation is just you collecting data in what? In an organized way for what? By means of what? Accounting system. Now, the cost accumulated will be related to specific products or department. It depends on the kind of product you want to look at or what? Or department, which is being needed for what? Planning, controlling, and decision making by the what? By the management. So we need this information for management what? Decision. So let's look at performance management. Performance management is that's one of the scope of accounting. So as an accountant, you can work anywhere, you can work in any organization. You can be an accountant anywhere because accountants are needed in all organizations. So it is now for you to study accounts, it is a privilege because there is no I've not seen that aspect that you will not be needed to work that aspect once it relates to what? To accounting, you giving information to the management. So now performance management is a continuous process where managers and employees combine efforts in planning, monitoring, and reviewing the effectiveness of workforce towards the achievement of the overall objective of the what? Of the entity. Performance management is also an aspect in what? In accounting. So it relates to is a continuous process, something we do every day. We do on a continuous what? On a continuous basis. Are we together?
Yes.
Now another aspect you will see meet during this your accounting career process is auditing. Auditing relates to examination of financial records by an external what? External party known as what? Auditor. So looking at checking through the records if they are actually what? They are actually um they are actually accurate. Are we together? Or are they in line with what? With the principles of accounting? Are we together? We also have the government accounting. That one tell us the recording, classifying, classification, analysis of what? Information relating to government what? Financial transactions. Are we together? Are we together?
Yes.
Are you there? So now government accounting is the process of recognizing and reflecting in the appropriate books of account and records of generated revenue and disbursed expenditure of government. Like I said, it relates to the recording of transactions of the government, of the what? Government. Government. Are we together? Are we together?
Yes.
Okay. Now, in such a way as to easily provide relevant financial information vital for appropriate decision making from time to time and in compliance with laws regulating government what? Finances. Now, it is a class of accounting in the public sector where government has some executive what? Responsibilities. Responsibility. Public sector consists of ministries, and departments and their what? Agencies. So when it comes to government aspect, it includes all ministries and departments with their what? Agencies. Are we together? Now, government accounting is concerned with planning, control, and appraisal of government activities, and in effect accountability. So when it comes to government accounting, it relates to the planning, control, and appraisal of government, looking at how government has utilized the what? The citizens what? Money. Are we together? And what are the citizens money? That's the tax being paid by what? Individual in a particular what? In a particular country. Are we together? Now the next thing is taxation. As an accountant, you can also be a tax expert. Are we together? So taxation, the accounting profits generated in the financial statement provide the basis of determining the taxable profit of an entity. So the accounting profit being generated by us, it will really help us to determine the amount of tax to be paid by an entity. Now, the taxable profits are different from the accounting profits because certain expenses and income are allowable for what? For accounting process, but some are what? But disallowable for tax purpose. The this thing, accounting processes, the accounting expenses being recorded in our financial statement. Some items are being allowed for tax purposes, while some are being disallowed for tax purposes. So the item we record in the accounting, according to accounting principle, they are they may not be allowed when it comes to tax. That's the reason. When it comes to tax, we have we have what? Allowable expenses and allowable income. Then we also have disallowable what? Expenses and disallowable what? Income. Some income are not being allowed under the what? Under the tax law, because they are tax law and accounting principles, they are different things entirely. They are what? They are what? They are different things and different things entirely. Are we together? Are we together?
Yes.
Now the next thing is financial management. Now finance is meant to be cash and cash equivalent and other resources of the entity. That is, when it comes to finance, we are looking at anything that relates to money that we can quantify, that can be quantified in monetary terms. That's finance for you. Are we together? Now, financial management is now the process employed by management of an entity to ensure the resources are efficiently and effectively procured, utilized, and accounted for by the owners of the business in such a way to maximize the wealth of the owners. So we are looking at how we can what? How we can make sure the resources being owned by an entity are effectively procured, utilized, and also what? Accounted for by the owners. So that the wealth of the owners can be what? Maximized. And what's the wealth of the owner? That's the money being invested by the owners of the business. Are we together? So the primary task of financial management is best divided into three. So we have three tasks. we will be looking at when it comes to financial management. Number one, we will be looking at the financing decision. That is, how do we finance the company? How do we contribute money into the business? Are we together? How do we get money being contributed into the what? Into the business. Then investment. That is, how do we utilize this money being invested in an effective and efficient what? Way. Then when it comes to dividend, then the profit being realized by us, how do we make decision on um on the payment of what? On the payment of of the on the payment of the profit being earned by the what? By the entity to those people that contributed to the business. And this profit happens to be return on investments. Are we together? Dividend happens to be what? Dividend happens to be return on investments. That is the addition after you utilize the money. What you realized after the business has utilized the owner's money. What is expected of the business to now pay the what? To pay the owners in return. Are we together? Are we together? Are we together? Oh,
Yes.
good. Now, other secondary roles of a financial manager includes the other roles of a financial manager includes the treasury and liquidity. That is when it comes to treasury, that is keeping of money. Then liquidity is all about the availability of what? The availability of cash to meet certain what? To meet certain obligation of the business. Are we together? Are we together?
Yes.
Then the next thing is replacement of non-current assets. The replacement of what? Non-current assets. That's the physical assets. Non-current assets happens to be both tangible and non and intangible assets. They are they have a long span. That is they are something the non-current assets are tangible assets that have a long span of more than 1 year. Are we together? Are we together? Then taking
Yes.
appropriate insurance policies on the entity's assets generally by ensuring all the companies all the companies assets against loss. Are we together? Are we together? Then also
Yes.
tax management. That is, how do we manage our tax system so that the money to be paid to the government will be what? Will be minimized. Are we together? Are we together? Then also management of the entity's what? Working capital. Management of the company's what? Working capital. That is looking at the current assets of the entity. That is those assets required within 1 year against the what? The current liabilities. There are financial obligations to be settled within 1 year. That's the working capital. The difference between the current asset and the what? Current liabilities. Now, the other aspect we'll be looking at their forensic accounting. Forensic accounting refers to the application of accounting skills. Two, investigate and probe frauds, deliberate misrepresentations, that's falsification or misappropriation, or embezzlement of an entity's resources with a view of recovering such funds, usually through legal proceedings. When it comes to forensic, it relates to investigation of fraud or misappropriation of investigation on the misappropriation of the company's fund or an entity's what economic resources. Are we together? But it will be using the what legal proceedings, proceedings, taking legal what legal process in the recovering of what the misappropriated fund. Are we together? Now we also have social and environmental accounting. That one relates to the effects of the company's operation on its environment. So how do we account also for this? Are we together? The impact of the business operation to its what? To its environment, either positively or what? Or negatively. Now, social and environmental accounting is the branch of accounting that deals with the accounting for and reporting of the social and the environmental impact of an entity's activities upon stakeholders such as investors, management, employees, customers, suppliers, and community where the business entity what operates. We are looking at the impact of the business activities on stakeholders. Then when we are those are the scope of what? Scope of accounting. You might be asked to list the scope of accounting. You know those scope we've mentioned. Can you just mention three out of the scopes being mentioned? Three. Just give me three of the scope we've mentioned before. Oh yeah, oh,
Okay. Um, cost accounting,
cost accounting. Another one.
um, financial accounting,
Financial accounting. Another one.
social and environmental accounting.
Social and environmental accounting. Thank you very much for this. Okay. Then we also have others like um, auditing, taxation, performance management, and others. Now, let's look at the qualitative characteristics of useful financial information. What are the traits we need to see when it comes to useful financial information? Are we together? Are we together?
Yes.
Now, what are those things? Now, when it comes to um, qualitative characteristics of a useful financial information, we'll be looking at two things. One, the fundamental and enhancing qualitative characteristics. We have two characteristics to be looked upon when it comes to useful financial information, the characteristics of a useful financial information. One, the first one is fundamental, that is the main characteristics. Are we together? Are we together? Then the enhancing aspect, they are just supporting the what? The main characteristics of a useful financial information. Are we together? Are we together?
Yes.
Now, two things we need to know about fundamental qualitative characteristics of a useful financial information. One, relevance. What is the first thing we will be looking at? The first
Relevance.
thing we will know that this information is useful is how relevant the information is in making what? Decision. In making financial decision. How relevant is the information? Now let's take for instance, before you start your ICANN career, someone just come to you to tell you something about ICANN and the information is not useful. Will you make any decision of starting starting your career? Eh?
No, I won't.
No, because you will see it like the information is not needed. Abi, is that not
Yes.
it? Okay, now as you are as you are doing your ICANN stuff, someone now give you information relating to law. Do you need it? And you don't have passion to be a lawyer, to join the legal team. Does the information is the information relevant to you?
It's not relevant.
It's not relevant. You will not make any step in what in pursuing the legal aspects. But when it comes to accounting, you see that okay, for me to be an accountant, I need to what? I need to start something. Abi, so that's how it is.
Yes.
Now, for information to now be relevant, it makes difference in what? In the decision made by what? By the individual. Are we together? That is the information you've received makes the difference in the decision being made by you. Are we together? Are we together?
Yes.
So now, based on what we have here, if financial information is relevant, if it can make a difference in the decision made by users, if financial information makes difference in users' decision, when the users are aware of such information and take full advantage of it, they take what? They take full advantage of it. A reliable financial information is capable of making difference in decision when it has what? One, it has predictive value or confirmative value. And also if it now has if the information has what? Both predictive value and confirmative what? Value. Predictive value is what? You looking at the future values. Are we together? Are we together? We
Yes.
looking at what is coming in the future. Then confirmative value is we looking at what has happened in the what? In the past. Are we together? Predictive value is looking at what is expected in the future. Then confirmative is just okay, what has happened in the what? In the past. Are we together? Now, if it's now predictive value, confirmative or both has predictive value. Okay, information has predictive value if it helps the users to predict what happen in the what? In the future. If the information you have will help you to predict what will happen in the future, then the information is relevant. Are we together? Are we together?
Yes.
Good. Now, for confirmatory value, then we are looking at where the information helps users confirm their earlier assessments and prediction made in the what? Made in the past. That is, it helps you to to confirm what has taken, what you've done in the past, the assessment you've made in the what in the past. Now you now confirming it, then it means that's a confirmatory what value. Then you can now combine both when you can confirm the present the past information, and also make a prediction of what will happen in the what in the future. Are we together? Are we together?
Yes.
Good. Now, the next thing we'll be looking at, the next qualitative characteristics we'll be looking at is faithful representation. Faithful what? Faithful representation. When it comes to faithful representation, that is having your presentation to be um, making your information to represent what they are, the actual thing they are. Are we together? Now, financial reports a depiction of economic phenomena which will be in what? In words and number. Are we together? Financial reports depiction of economic phenomena. So the economic phenomena must be either in words or what? Or numbers. Now, to be useful, financial information must not only represent relevant phenomena, but it must also faithfully represent the phenomena that it purports to represent. Now, to be a perfectly faithful representation, a decision will have three characteristics. One, it must be complete, neutral, and free from what? Error. Your information must be what? Complete. It must also be what? It must be neutral and also free from what? From error. Now, when it comes to complete depiction includes all information necessary for a user to understand. For a user to what? For a user to understand. When it comes to depiction, complete depiction, that is, you have all the relevant information. The relevant information you have must be what you can easily what? Understand. Are we together? Are we together?
Yes.
Now, for neutral, a neutral information is without bias in the selection or presentation of the financial information. That is, the information being presented must be free from bias. It must not be based on individual bias. Are we together? Then the last one is now free from error. Free from error means there are no errors or omission in the description of the phenomena, and the process used to produce the reported information has been selected and applied with what? With no errors in the process. That is, the information you have, they are free from what? Error. no mistake, no error from the information being presented. Are we together? Now, enhancing qualitative characteristics, those ones are the what? Supporting characteristics. What are those things we'll be looking at? We'll be looking at comparability. How you can compare your present information with the what? With the previous information. For you to make decision about what will happen in the what? In the future. Are we together? Are we together?
Yes.
Okay. Then verifiability. You verifying what has been prepared. Are we together? Now, let me take it from the comparability aspect. When it comes to comparability is that qualitative characteristics of financial information that allows choice between what? Between alternatives. It allows you to make choice, to select from what? From relevant alternatives. Where an entity is privileged to have information about the financial performance of other entities of similar sizes in the same industry, a comparison of the entity's performance with those of others enables sound economic decisions to be made. For example, decision as to whether to dispose or hold a particular investment, whether to invest in one industry in preference to another are made by this process. You comparing your information, checking relevant what? Relevant alternative you have. Are we together? Are we together?
Yes.
Now, verifiability. Let's look at verifiability. When it comes to verifiability, it's the quality that enables users to have the assurance that information depicts exactly what it's purports to state. That is you getting accurate value, checking the correctness of the information you have. Are we together? Checking what? The correctness of the information you have. It means you are verifying the information you have. Are we together?
Yes.
As such different knowledgeable people, considering the information will be able to arrive at similar decisions on the same issue. So people people are able to what? To people are able to, okay sir, they are able to make decisions as to what? As to the same decision you've made, and other people are able to what? To make such decision. Are we together? Then timeliness implies that users are given the relevant information needed to make decisions, to make economic decision in time. That is you giving information at what? At a particular point in time, getting information on time. Then the information is what? Is timely. Then understandability. People are able to understand the information being provided by you. Are we together? So information should be presented in a way that the user can what? Can comprehend it. The information being presented by you should be other people should be able to what? To comprehend. They should be able to comprehend the information being presented by you. Are we together? Now let's quickly look at um Let's quickly look at the users of financial statements. Who are those people that need this information being presented by you? One, the owners of the business or investors. They are the first people that need this, that have interest in your what? In your accounting information. And why do they need it? These are the sole traders, partners, and shareholders of an organization, of an entity. They need information to what? To assess how efficiently the management is performing. They want to know how the management, those people that are in charge of managing the resources of an organization, how they utilize the resources in their charge. Are we together? They have in their care how they've what? They've utilized this, they've utilized the resources in their care. Are we together? Are we together? So the
Yes.
first set of people that need your financial information, they are what? They are what? They are who?
The
Rather,
owners of the business.
they are the owners of the business or investors. Now, they want to know how profitable the business is and how much of the business they can withdraw for their own use. They are interested in how profitable the business is. Okay, this business I've invested into, how will what will be the return the business has actually what? Has actually realized, and how can they withdraw the what? How can they withdraw the resources from for their own what? For their own use. Are we together? Are we together?
Yes.
So that's about investors. So it will also allow users to make appropriate investment decision. It will help them to make appropriate what? Investment decision. Okay, what are those investment decisions? Okay, they need to know whether they are buying more, they are investing more, or the one they have, they are disposing it of. Are we together? Or they need to hold the investment in their what? In their hands. I hope you are getting it. Are you getting it?
Yes.
Good. Now,
Yes.
so that's about the owners of what? The owners of the business. Now, the management. These are the people who manage the affairs of the business for the owners. They are there to manage the affairs of the business for the what? For the owners. They are the management of the what? Of the business. Now, why do they need this information? In a liability company, they are the members of the board of directors and other management staff. Are we together? They are the members of the board of directors and other management what? Staffs, like the general managers of different what? Of different branches. Are we together? They need accounting information to ascertain the efficiency of the policy they formulate and to plan and control the resources of the business. They need the accounting information for them to ascertain the policy. You know, they are there to make what? To make their decision, to make decisions on behalf of the owners. Are we together? They are there to make decisions on behalf of the what? Of the owners. So they will now evaluate how efficient their policy has actually helped the what? The organizations. the organization. Are we together? So the next set of people, they are trade payables. They are people that what? That buy goods and services on credit. That the company buy goods and services from them on credit. Are we together? They are the ones that supply goods and services to the company on credit. Are you getting it?
Yes.
Are you getting it? So they are creditors to the what? To the business organization. The next set of people are the customers. They are people that purchase goods from. They are people that purchase goods from the company. Either they buy it on cash or on credit. Are we together? Are we together? These are people who purchase goods as or goods or services provided by the business. The customers want to know whether the business will continue to be a reliable source of supply. Now let's take the trade payables first before coming back to customers. Trade payables, their own interest is to know the ability of the business to pay for the goods being supplied business will be able to pay for the supply goods and services. That's their own what? That's their own area of what? Area of interest. Are we together? Then when it comes to customers, they have interest in knowing if the business will be able to supply them whenever they make they make their order. Whenever they make their order, the company will be able to supply their goods on timely basis. Are we together? Though they will also be interested in the quality of the product of the business. They also have interest in the quality of the product being supplied by the what? By the business. That's customers. Then the suppliers, they will have interest in the business paying up their what? Their money. The ability of the business to pay up their debt on timely basis, on time. Are we together? Are we together?
Yes.
Good. Now, the next set of people we'll be looking at are the tax authority. They are the what? They are the tax authority. They are there to assess the company to tax. They are there to check if the company has made profit so that they will be able to charge the company to what? To tax. Are we together? So accounting profit determines the basis of computing tax. Tax authority wants to determine the tax payable by the entity and its what? And its employees. They are there to determine the amount of tax to be paid by the what? By the entity and its what? Employees. Just give me a minute. I will be right back. 1 minute.
Okay.
So I'm back. So let's
Okay.
continue.
All right.
So where are we? I'm coming.
We're discussing tax authority.
We are still on the users of financial of accounting. So we are on tax authority. Abi.
Yes, tax authority.
So they are there to determine the amount of tax to be paid by the business entity, either on its profit or its the amount of tax to be paid by its employee. Are we together? So that's why you will just see some people, they will just come to the office, they will be requesting uh for tax from the what business entity. So now the next set of people are the employees. They are the employees of the what of the entity. Existing employees need accounting information to enable them decide how secure their job is and the ability of the business entity to pay good salaries and provide good welfare facilities. They are there to what? They are there to know how secure their job is. Are we together? If their job is not secured, they can quickly what? They can quickly leave. Are we together? Are we together?
Yes.
Good. Now, the next set of people are the lenders. They are people that what? That lend money to the business in form of loan. Are we together? They are people that provide finance to the what? To the business entity. There are people that provide finances to the what? To the business entity. Now, we also have government. Government needs financial information for them to make fiscal policies, for them to formulate fiscal policy that will be of benefit to people within a particular country, to the citizens of the country. Are we together? Then financial analysts happen to be the professionals that are there to advise their clients as to whether they need to invest in a particular business. Like let's take for instance, you as an entity, you want to invest in a business, you want to buy the shares of a company. There is you need to meet these people to check through the company's record and what and advise you on what to do. Are we together? Are we together?
Yes.
Then also the last set of people are the general public. They are the people. They are the general what? They are the general public. They are the people, the public. So these are the people that surround the organization. They have one impact or the other because the general public also need this information to know whether they will also be what? They will also be they have interest in investing into the business. Are we together? The members of the public, which includes individuals, trade unions, associations, political parties, African unions, and international monetary funds, need accounting information for various what? For various reasons. They use the available financial information to make decisions on whether or not to deal with an entity determine their level of involvement. Let's take for instance the trade unions. You know the trade unions, they are there, they have their own impact on the organization like the NLC. They are the ones to tell the workers on what to do, whether they need to work, they need to be on strike. Are we together? Are we together?
Yes.
So they also have an impact, they also have a stake in the business, in the what, in the business, in the business entity. They also have a stake in the business entity. Now the work of an accountant, let's quickly look at the work of an accountant. What are the works you do as an accountant? So a professional accountant perform various types of work for an entity as an employee or as a consultant. Is either you work as an employee to the organization or as a consultant. Are we together? Is either you
Yes.
are an employee to an organization being employed, or you give a consultancy service to an organization. So for instance, members of Institute of Chartered Accountants of Nigeria are classified into two. We have two classification of members of accountants of ICANN. Is either you join the members in practice, or you are not members in practice. And who are the members in practice? They include people that are engaged in auditing. Are we together? People that are engaged in what? In auditing, tax services, management advisory services, insolvency services, then investigation what? Investigation service. Are we together? Are we together?
Yes.
So auditing, people that work in auditing, they are there to examine the financial records of an organization. When it comes to tax, they are there to give companies on to give advisory services, to provide advisory service to a business entity when it comes to tax matters. Management service, how they can work, they can manage their resources. Are we together? Are we together?
Yes.
Then insolvency, when it comes to insolvency, that is, they receive they act as a receiver when a receiver manager in the process of winding up of the what, of the business entity. Let's say the business cannot continue as a what, as a business entity, as a going concern entity. They will be the one to what, to be a receiver, to manage the business entity in the process of what, the winding up of the what, of the business. Now investigation, dey investigate fraud or any other matter for which investigation services are required, which include what, the use of what, forensic accounting. So they are there on investigation what, basis. Now when it now comes to members not in practice, there are people that work in that are these are accountants in the employment of government ministries and parastatals, or in private what, in private entities. What is their work? They prepare the financial statement and annual report of the entity on behalf of the what? On behalf of the management. They are there to prepare the financial statement and annual report of the entity on behalf of the management. Then another thing is they provide relevant management accounting information for decision making. They provide relevant management accounting information for decision what? For decision making. Another thing is that they set up and run efficient system of accounting and internal control. That's their work. Then also they act as the what? Treasury manager. They are in charge of the what? The company's money. They are there to receive money and also what? Disburse money. Are we together? They function as treasury and financial managers. They are there to function as what? Treasury and finance what? And finance managers. So now you can read through the International Accounting Standard Board.
Okay.
So I want to ask, will you read through it? Hello?
Yes, I'll read it.
Okay, you can read
You
through it.
said
Like,
international.
okay. Likewise, Financial Reporting Council. So next class we'll be looking at the business entity, the definition of business, and the classification of business entity. What do we mean by business? Then, what are the categories of business entity we have? Entity we have. Are we together? So I hope you
Yes.
really enjoyed it today's class. So
Yes, I enjoyed it. Thank you.
you enjoyed it. Then, do you have any question?
No, not now.
Okay. Currently, no. So next class we'll be looking at. Then in this class, basic accounting is both theory and what? And calculation. So I will be giving out assignments on the calculation aspect and also on the notes when time as we progress in our class. Likewise, I will be fixing our classes during the week. Will you be available so that we will be able to cover up before March? Do you understand?
Yes, but
So that we'll be able to cover
that
up
is like
all
in the
the
evenings.
topics. You like it like that?
But it will
Hello?
be in the evenings, right?
To be in the evening, yes. Maybe from 8, 9, 8 to 10. Just 2 hours in a day.
Okay, no problem.
So other lecturers will also be fixing their classes during the week. Do you understand?
Yes, all right.
No problem. So thank you very much for joining today's class. I hope you've learned one or two things from today's class.
Yes, I
So
have.
as
Thank
time
you.
goes on, we'll be moving more into what accounting is all about. The principles that guides us when it comes to preparation and presentation of financial statements. Then how do we present our financial statement? How do we prepare our financial statement as a whole to the management? So all this will be looked on when as we progress. Are we together?
All right.
So our next class, our next class will be next week. So as from the other week, we start fixing classes in the middle of the week. After next week, fixing of classes will now be will now be fixed along the route. So let's see how it goes. So
Okay. All
thank you
right.
very much for joining today's class. We
Thank you.
appreciate you joining the class, and we promise to offer you the best service ever. And also we wish you a success in your coming exam, which will take place in March.
Thank you so much.
You are welcome. All right. Have a wonderful,
Okay.
enjoy the rest of your day.
Yeah. And you too. Thank you.
All right. Thank you very much.